Good morning and welcome to the Morning Bell. I'm Robert, joined as always by Lizzie and Steve. It's Friday, August the 14th, 2026, and we've got a packed show this morning. AI earnings delivered a real split decision across the sector this week. Applied Materials reported after yesterday's bell, and today we're watching retail sales and consumer sentiment data dropping this morning. Let's get straight into it. Lizzie, yesterday's session was a real tale of two cities in AI. Who were the winners and who got crushed?
Morning, Robert. The winners were the pure-play AI infrastructure names. Nebius surged over 34% on Descartes AI acquisition talks. CoreWeave jumped nearly 20% on strong Q2 earnings, and Supermicro gained over 19% on a solid quarterly report. On the losing side, Cisco dropped around 6% despite reporting $17.25 billion in revenue. And solid EPS, Cerberus created 16% despite raising guidance, and Coherent also fell sharply after its print. So the market was clearly rewarding direct AI infrastructure exposure and punishing anything that didn't exceed already elevated expectations.
CoreWeave and Nebius surged, but this morning they're both pulling back. CoreWeave down 2%, Nebius down 4%. Is that just profit-taking or is something else going on?
It's a combination of both, honestly. After the kind of single-day moves those names put up, some profit-taking is completely natural and expected, but there's also a meaningful overhang from Michael Burry disclosing short positions against Nebius, Micron, Oracle, and the SOX Semiconductor ETF. That's not a signal traders can simply dismiss, and it's adding a real layer of skepticism to what has been a very crowded consensus trade in AI infrastructure.
Applied Materials reported after yesterday's bell. Consensus was around $3.39 EPS on $9 billion in sales. How did that land given everything we saw earlier in the week with Cisco and Cerberus?
The setup into that print was genuinely difficult. When Cisco drops 6% on strong numbers and Cerberus falls 16% despite raising guidance, the bar for a positive reaction becomes nearly impossible to clear for any AI-adjacent name. The broader S&P 500 is technically sitting in neutral territory right now, with no strong directional conviction. Momentum is supportive, but not decisive enough to give bulls a clear edge heading into the session. With September and October historically being the roughest stretch for equities, traders should be thinking carefully about their exposure to the most crowded AI names and paying close attention to further signals from institutional players like Burry before adding risk here.
Steve, PPI and initial jobless claims both dropped at 8:30 yesterday morning. What came out of those prints, and how does that fit into the Fed picture right now?
Robert, on the jobless claims side, the most recent reading came in at 199,000 against a forecast of 202,000. So the labor market continues to show genuine resilience, with initial filings staying well below levels that would typically concern the Fed. And this week's forecast was calling for a slight uptick to 202,000. So coming in below that is a modestly positive signal for labor market stability. On the inflation side, yesterday's July PPI was the key wholesale inflation read of the week, and taken together with Wednesday's CPI print, showing headline inflation at 3.0% year over year and core at 2%, both essentially in line with expectations. The cumulative picture this week suggests inflation is cooling gradually but remains elevated enough that the Fed sees no urgency to act. The September rate hike probability has already fallen to around 4% from over 54% just a week ago, which tells you the market is reading this week's data as modestly dovish without being a clear green light for cuts either.
And what are you watching this morning on the data front, Steve?
Today is the most important data day of the week from a consumer perspective, Robert. July retail sales is due out this morning, and that number needs to show continued spending momentum to keep the broader economic narrative intact heading into the fall. A soft print here would raise real questions about whether the consumer is starting to feel the weight of still elevated inflation. Alongside that, the University of Michigan Consumer Sentiment reading for August is also on the calendar this morning, forecast around 54.5 versus a prior reading of 55.2. Sentiment has been tracking just above that 55 level after a notable improvement last month from the high 40s. So any meaningful drop today combined with a weak retail sales figure would be a significant 1-2 punch for the consumer story heading into a historically difficult seasonal window for equities.
Lizzie, flipping over to crypto. Bitcoin briefly touched 64,000 on Wednesday's CPI print, but couldn't hold it, and technically it's sitting in neutral. What does the chart tell you?
The technical picture for Bitcoin right now is genuinely directionless. It's trading just under 64,000, with momentum that's mildly negative and no meaningful buying pressure showing up yet, which puts it firmly in wait-and-see territory for traders. The interesting development is that Fairlead's Katie Stockton is flagging some notable longer-term signals: oversold readings on the monthly chart and hedge funds flipping net long on BTC futures. And she specifically notes Bitcoin is showing a stronger bottoming setup than gold right now, which is worth paying attention to. That said, Bitcoin still needs a fresh catalyst to break out, whether that's regulatory progress, sustained ETF inflows, or organic platform growth, because the macro tailwind from Wednesday's CPI print was clearly already priced in the moment it landed.
Ath and Sol, where do they stand technically, and is there anywhere in crypto actually showing strength right now?
Both Ethereum and Solana are sitting in the same neutral zone as Bitcoin, which tells you something important about the overall state of the market. Ethereum is trading around 1880 with momentum essentially balanced, and Solana is at 7560 with similarly indecisive signals, neither buyers nor sellers holding a clear edge in either name. The more notable story this week is actually in platform-driven tokens. Hyperliquid is up 128% year-to-date on the back of record trading volume, platform revenue growth, and a deflationary burn mechanism, while Bitcoin is down 28% and XRP is down nearly 46% on the year. That divergence is significant, and it suggests the real opportunity in crypto right now may be in tokens with genuine organic growth drivers rather than the majors, which remain heavily dependent on macro catalysts and ETF flow dynamics to move the needle.
That wraps up today's Morning Bell. This is not investment advice. Do your own research, and don't forget to subscribe so you never miss a morning. Have a great weekend, everyone.